let's discuss the markets, the various asset classes and wealth management at large with Feroze Azeez, the Deputy CEO at Anand Rathi. Hi Feroze, good afternoon. This is Nayantara. Thanks so much for joining us. I'm not going to talk to you about the equity markets. We'll get to that in just a bit. We're talking to you a day ahead of budget. I know you track the real estate market really closely. It's been a market which has not had buyers in it, I think, since the Lehman Brothers crisis. It's been almost a decade now of that crisis in the property market. Do you think Arun Jaitley can do anything to revive the real estate market, bring the buyers back, so all of those that are holding on to the real estate inventory can also feel happy they'll find sellers?
Yeah, I think, Nayantara, like you rightly pointed out, real estate has gone through its share of pain over the last few years, and the demand has been really sluggish for the last few years. But coming back to the point which you made, a budget is a significant kind of a event from an asset class perspective, in not just real estate but the rest of them as well. When it comes to real estate in specific, I think bringing back investor demand is going to be a very tough task for Arun Jaitley. It's not going to be so easy to bring back investors into the game of real estate. But definitely, I think because there are some subsidies for affordable housing, which is the case in my expectation as well, there is going to be consumption demand, which will definitely have an uptick. And I think affordable housing will definitely get a boost. Looking at how the agenda of this government towards creating housing for everybody has moved so far. So point one which I'm making is, of course, there would be some degree of uptake in the consumption demand, but I'm not so hopeful that the investor, which was the large portion of the real estate segment, is going to return anytime soon.
All right. Let's talk a bit about more asset classes then, and you don't seem to be very optimistic on gold as an asset to park the money on, and given the kind of volatility we've seen, given the kind of uncertainty across the globe, gold has actually run up a fair bit. What makes you not so optimistic about this asset class?
See, I think gold as an asset class, in dollar terms, it's not an Indian rupee asset, it's a dollar asset. Unfortunately or fortunately for Indians, the gold prices have moved up largely over the last decade, if you strip gold from the benefit of rupee and measure it in dollar terms, I don't think it's an asset which has delivered the return for the Indian community. Indians, being the largest importer of gold for several years, have not been benefited out of gold's purchase. Point one, Indian rupee returns have been stupendous, but last few months, of course, rupee has appreciated, but otherwise, if you look at the last couple of decades, large portion of the returns have come because of rupee depreciation. Point one. Then if you move on to gold as an asset class, I think it is more of a currency than an asset class, because it does not inherently add value to itself, being a commodity, unlike the rest of the asset classes. Be it real estate, there is rental income possible on it. Equity, there is lot of corporates which make money for the owner of the asset. If it comes to debt, there is interest which gets paid out, unlike commodity, which does not add value to itself. I think it should be more of a currency than an asset. And unfortunately, the third point which I want to make is, quite a few of us think that gold could be a hedge towards any unforeseen event risk, which can be global uncertainty or any war and stuff. But a small portion of your portfolio, 10, 15, 20%, is not good enough to protect you against such adversity. So it doesn't serve the purpose which generally people project it to have, which is the hedge it naturally brings to the portfolio. But 10%.
Get your point that you should look at gold not as an asset. Best to look at it as the currency part in your portfolio. But I want to come back to what I was discussing with you, Feroze. Today you're seeing the equity markets under pressure. It could be because of the weak global cues as well, but there is a sector that's standing out. It's not trading in the red, and that's the real estate sector. I think the clear expectation is that Arun Jaitley is going to do something for housing. You said it can only be for affordable housing. Interest rates also need to be much lower, which obviously budget cannot take care of. That's the Monetary Policy Committee's viewpoint. But the trend in the market, if I go by that, it clearly means that there is something very big that's going to be coming. So my next question to you is that you don't like gold, you don't like real estate. What is it that one should invest in? Are you going to say SIPs like every other wealth manager?
No, definitely not. Yeah. If a person already has his money, a systematic investment plan is a commitment of future earnings. If somebody is sitting at an X amount of corpus today, he needs to do something which is very different than what he or she did in the last bull run, is get into equity, but learn the art of hedging, which I think fortunately several of our investors in the community have not learned that. So what am I trying to get to is equity is going to be the asset class for the future as well, looking at how the economics is shaping up. But having said which, it's important to manage risk and use an instrument called LEAP, which I've been trying to propagate. It's been there in India from 2001, but that's not used so much. That's a very good mechanism to hedge your portfolios. So you can't go naked equity. You will have to cover your downsides using hedging mechanisms, which will require some degree of learning. Probably in a conversation like this, at best for the viewers, we could create curiosity for them to go back and do their homework of what this nomenclature actually signifies. So point which I'm making is equity is certainly going to be the asset class because there is going to be some degree of liquidity, domestic liquidity, which will propel the market going forward as well. But covering your downsides to make sure that the global cues don't impact you adversely using one method of hedging, which I've been recommending, is LEAP. Second point is in equity, when you use a fund manager or a professional manager, there is an extra return over and above the index returns which have been generated over long periods of time. So that to the tune of 4-5% come very handy to create a risk cushion as well. So equity should be the asset class which a person should take as the backbone of his or her strategy for the next 2-3 years, if not more.
Feroze, we're unfortunately running out of time. Thank you so much for joining us a day before budget. We look forward to getting you back once there's clarity. I think Main Street and the bond markets in particular are waiting for any kind of clarity that they can get on the state of the fisc, if there's going to be a fiscal slippage, if yes, by how much, etc. And that large spread that you're seeing when it comes, and the spike that you've seen in the government bond yields, there should be some stability that will be reined in, and we'll discuss that the bond market and the debt market at large with you after the budget, and once we have clarity. As always, a pleasure chatting with you. Thank you so much. But clearly budget 2018 is the big theme of the